All right. Little yacht rock.
We are on.
Man, loving some yacht rock.
It's early May, and we've got the yacht rock. I didn't even know this was a thing.
It's an awesome thing.
This is Collier's new deal.
I love yacht rock.
Have you guys heard of that?
Yacht rock is where it is.
We got volume and everything. We're good.
Oh, we're good. We're good. I mean, just look at that. You make my dreams. Daryl Hall and John Oates. Who does not look? Hey, look who's here. It's Courtney Harvey.
Cassie Mingle, Courtney. Hey, and then here's the next one.
Hey, there's Marcus. Marcus probably knows yacht rock.
Little Benny and the Jets.
Benny and the Jets. I mean, just good stuff.
You can't beat that. So this is a classic graduation from cruise ship to now a love of yachts and
love of yachts. I'm working my way up.
Yeah.
And by the way, since Cassie's in Minnesota, you know who qualifies in yacht rock? Prince. Hey,
I didn't even know this was a thing.
Absolutely.
But
little darling Nikki. Hey, look, Sarah Stanford. What did she do today?
Trey Fave is in.
What happened to Sarah Adams today?
What happened?
Her appraisal came back.
Yeah.
Boop.
We got an appraisal, Sarah.
Absolutely.
We got a little Boz Skaggs. So anyway, that's the yacht rock that Collier is.
Yeah, I'm addicted to it.
On.
Yeah.
Now, Trey, I'm sorry, I got the Brinks truck today and not the Trey Fave koozie. Sorry, buddy.
Yeah, that's cold, man. It is cold, but it's cold to Trey.
I know.
Hey, and I'm representing. You know what I got on?
Yeah.
I got my.
You got the new Mortgage Bank golf shirts out.
Yep.
If everybody can see that.
Yep, right here, representing. I feel like I'm a NASCAR driver.
That's right. He's got his sponsor on the label.
Yep.
Got a fresh haircut from.
I saw that.
Tiffany Pillateri at.
Well, you got the high dollar.
The
place?
mail room. The mail room right over here in
the mail room.
Inverness.
That could be dangerous. If you told me you were going to the mail room.
Yeah.
I'm just saying.
Not to get mail, but.
Yes. There's Jason Grantham, War Eagle. Jason, hope you're doing well over in the big. You're in Atlanta, I believe. So hope you're doing well. Great guy.
Awesome.
Well, hey, we're gonna jump into real estate in a minute, but you know, obviously we like to talk about a few things. Have you heard about this Movie Pass?
I'm not big on the Movie Pass, but it sounds exciting. What is it?
I mean, you know, I know a number of people. I've been looking into it. It's $9.95. You pay this company $9.95. They send you a little debit card, and you can go to one movie a day, every day of the week, every day of the year. You just can't see the same movie twice. And everybody's
$9.95 a month.
Absolutely. And so they're saying, you know, good deal. They tried to take the terms back, and it became not a good deal. They said for a little while you could only see 4 months, but now they're back. I don't see how their financial model's going to make it, but hey, it's getting to be real popular.
That's a movie every day.
That's a movie every day. But hey, it's a good deal if you like movies.
Yeah.
I mean, $9.95. Jeez Louise. Mark has it, of course.
Oh, of course, yeah.
Yeah, he didn't even go, but he thinks it's a deal.
The Walmart lunch guy with the yellow tags?
Absolutely.
Yellow tags on the
All right.
sandwiches.
Gerald Arnold, how are you? Just bought a new car. Hey, he's rolling the new stuff. He texted me earlier today, said he bought did you buy a Mercedes, BMW? What you get? There's the governor in 4 years, Howard Cannon's here. Good to see you, Howard. But let's talk about Warren Buffett. You know, they just had, out in Omaha, he had his annual meeting.
Yeah,
for
amazing.
Berkshire Hathaway.
Amazing. Those Berkshire Hathaway shares now, $300,000 each, right?
Man.
Awesome.
Just crazy. There's Toto. Hey, he's talking about little Toto. You know.
Oh, David, I appreciate that, man. That's the only reason you haven't deleted Facebook. This is it, man. This is it right here.
Who doesn't love the happy hour and a little Leinenkugel summer shandy?
He can't do
Absolutely. All right, hey, but one of the things, you know, I took back, I texted you the other night that, you know, I hadn't heard this quote out of him. He was repeating a quote he said earlier, and he talked about this. He said, this is Warren Buffett. He said, good habits are more important than being smart. So good habits, more important than being smart.
Well, that's definitely true. I mean, you can see that in business and in sports, right, with hustle and effort. You know, I talk to my kids about this all the time I mean, it doesn't take any talent to try hard. Right? And I think that's the same.
It was the same premise, and you know, obviously he's equating it to how we live our life from an investment standpoint, maybe. You know, I mean, he was talking about it, and he said, you know, that you got to start somewhere in your savings. The problem is we're always waiting until tomorrow because it's not fun to get in that habit of saving.
Exactly.
And same thing with real estate investing, or you're into the stock market, those type things. I mean, we can look at all our buddies.
Yeah.
And how they behave. There's some of them are just fly by the seat of their pants.
And I think some people look at savings and starting off as, it's not that much. Like, why would I do $50 a month? I mean, where's that going to get me?
That's not going to get me anywhere.
Yeah, that's not going to do anything. And it does take a lot of time with that little bit of effort. But this note you got here is interesting.
Yeah,
he started off with very little.
Yeah, I mean, started out. This is something he talked about. Warren Buffett said he sold Coca-Cola when he was about 11 years old, I believe, and he made $114. And then with that $114, he bought his first stock. Now, he didn't buy the S&P 500, right? But had he bought the S&P 500, some kind of indice, and then reinvested his dividends, he would have $400,000 today. Now, $114 then and today is different.
Yeah,
but it's still not a lot of money.
Yeah, and that had to be probably 70 years ago?
Yeah.
Yeah. So you're talking about compound interest over 70 years. Obviously, that's a long time. But, I mean, as the years go by and you keep putting these goals off and you keep putting the tasks off, that $100 a month or, a bonus check every now and then that you want to put back and say, well, in 10 years, you could have done it 10 years ago. Well, in 20 years, you could have done it 20 years ago.
Absolutely.
Right? So starting as soon as possible, letting that stuff grow, I think is the big message there, right?
I think it's a huge message, and I also think I love what he says. Don't save what is left after spending. Spend what is left after saving. In other words, pay yourself first, right? And somebody's commenting on your haircut.
Yeah, that's Brady down in Montgomery. It's my buddy.
Hey, yeah, he went to.
And then you didn't want to read Sarah's comment?
I don't read those type comments.
Collier can't pronounce Roll Tide.
Sarah Adams, big Auburn grad.
But I went to Georgia Tech, so I can.
Yeah, so he loves the Bulldogs. Anyway, moving on to let's talk real estate.
Let's do it. All right, so big question was about mortgage insurance and the different types of mortgage insurance. I mean, what is mortgage insurance? Basically, it is a fund that you pay into as a borrower that protects lenders from default. Okay, so it's kind of like a big pool of money. It's just like any other insurance. It's a big pool of money, and you still have to participate even if we feel like you're a great candidate to make your payments on time. It's because if you're paying less than 20% down on a conventional mortgage, we got to have the mortgage insurance.
Almost any conventional mortgage.
Yeah. Now that is
any
called,
conventional mortgage without 20% down.
Yeah, and that is called PMI. Okay, which is private mortgage insurance, which applies to conventional loans. That means that we get a private mortgage insurance company to come in and write that. They get the premiums, and then they pay out if the loan goes bad. Now, the difference is in MIP, which is mortgage insurance premium on an FHA loan. Now, you have upfront mortgage insurance of 1.75%. And not to get too lost in the details, but you got upfront and monthly on the FHAs. So on FHA, we've got the monthlies, which are for the life of the loan. The monthlies never go away.
The monthlies stay there forever.
On an FHA loan. Okay. Now, on a conventional loan, and one of the big questions is when does it go away? How do I get rid of it? Now, the monthly mortgage insurance will automatically cancel once you get to 78%.
Based on what?
Of the original value.
Okay, so is that the original appraised value, or is that the original sales price?
That's the purchase price.
Okay, so that's why an appraisal can come back in and help us here down the road, right?
Down the road. Yeah, that's a whole nother thing. But let's just talk about this for a second. So 78% of original value would automatically cancel. Now, if you get below 80%, you can call and request it as a borrower, but we're still talking about original value. So what are the situations, the other examples, like you're saying? So let's say you put $50,000 in the home, the value goes up, or in some strange markets, we have a lot of appreciation. Then
I like those. I like those markets.
Yeah, of course.
Melissa, War Eagle.
So if that happens, then you can request it from the lender to get an appraisal done. Now, you still have to pay for 2 years.
Okay.
Okay.
You still have to pay for 2 years. Now, see, that's something I don't think a lot of folks know. And quite frankly, I was not. I haven't been in the business a long time. And so what you're saying is that the PMI, you can't do anything for 2 years.
Right. It's going to have to be very extenuating circumstances for you to do anything in the first 2 years. Okay. Most of the guidelines are that you have to pay it for 2 years. Now, you got a comment about refinancing. You can still refinance in less than 2 years to get rid of the PMI if it makes sense, but you're probably not going to refinance to the same interest rate just to get rid of mortgage insurance. You probably want a better interest rate and get rid of the mortgage insurance. So that's an option. Otherwise, if you're in your original loan, we're sticking with the mortgage insurance for 2 years.
Okay.
And then you can get a new appraisal done. You can get the valuation done to calculate whether or not you're below that 80% mark and whether or not the lender will drop it.
One of the things, as I was researching for this, is something that I came across called a PMI canceling refi. Is that just a sugar-coated name for regular refi?
Man, that is what I love in this business, which is just mortgage terms, and they're just fancy. It's marketing. I'm sorry. It's mortgage marketing. These are just fancy ways to say things to get the phones to ring.
John McMillan.
This business is really easy and simple, but there is no PMI canceling mortgage.
There's no such thing?
If you ever hear that, just call them and laugh at them and then hang up.
So everybody should be laughing at me is what you're saying? Well, I just said it.
You found it online.
Yes, I did.
And that's innocent.
As Corey Smitherman said, smoke and mirrors.
Smoke and mirrors. That is classic smoke and mirrors. Yeah, that's just like the no out-of-pocket. Hold on. Let me get no out-of-pocket closing costs. You're still paying them.
You are.
Yeah.
Absolutely.
Unless you get a lender credit for the exact amount, you're still paying the closing costs. If they're taking it out of the equity of your house, it's still your pocket, right?
And so they call that 2 years a seasoning requirement, right? Is that what they call it typically?
Yeah. Yeah, it's a seasoning.
And what is the reasoning in your mind why they require 2 years?
I think they're just trying to guarantee some income on it because they're taking a risk on the loan.
Who is the insurance company?
Yeah, and the lender, so to speak, because the lender's taking a risk on a higher balance. And one of the reasons I like the mortgage insurance is because it's letting you put less down. You don't have to come to closing with 20% down anymore. Maybe you've got, let's say 20% is $100,000. But maybe you could get away with a lot less. So you could put some of that money somewhere else and do something else with it. If you're borrowing money at 4.5%, 5%, and putting less down, then you can either. I think some of the big things to do. Right, the first thing is the emergency fund, 3 to 6 months worth of savings. If you don't have that set up, then you do not need to be putting 20% down. And then the next step in investing, anyway, would be maybe $10,000 in an index fund, right?
Oh,
so
absolutely.
I think if you don't have a couple of these things already set up, if you don't have any 401k, no retirement, there's no reason you should be putting 20% down. Don't put all your cash into the house.
Hey, by the way, her husband makes a mean potato salad. It's incredible.
But that's some of the benefits of the mortgage insurance.
Well, I want to go back to that though. Is that we go back to 2008, before 2008, when the stuff hit the fan, if you will. What's funny is that all we heard on the news was, the banks are getting drilled, right? The banks didn't take the brunt of it. Who did? Who took the brunt of it? The first 20% of all those loans, and that was a lot of times was that mortgage insurer.
Yeah, a lot of times the mortgage insurer took the hit. The consumers took the hit. Banks lost a lot of money. I mean, the whole economy almost collapsed. So everybody took it on the chin. But going back to your point about the 2 years. I think they're just trying to guarantee some. That kind of keeps the rates down, right? So if I'm guaranteed for every policy I write, I'm at least getting X amount of money, right? So I'm guaranteed that 2 years. Then that can help with the premiums and keep those rates low.
Did you see rates from 08, or let's say before 06, 07, not that they really cared at that point, but did you see rates increase based on the fact that they paid claims?
No, I think rates are comparable now,
percentage-wise.
Yeah, to where we've always been. And now there is more risk-based pricing on the mortgage insurance.
So it's still credit,
which means credit, down payment, things like that will get you lower rates.
Right. And now, for the average consumer, can they shop this, or do you shop it for them?
Yeah, we shop it. We shop it for you here at our type of a company. a lot of big banks and things like that have agreements with these mortgage insurance companies where their rates are kind of fixed and they don't really shop the mortgage insurance.
And are you talking big monster mega banks? Is that what you're talking?
Yeah, I'm talking about big local banks. Most of your big banks, yeah.
Right, and things that have rocket type mortgages.
I'm not sure about how they handle their mortgage insurance, but
I'm sure they do the same way they do their loans: overpromise and underdeliver.
That is more than likely the case.
Hey, Jenny Williams made it. You see Jenny? Yeah.
Yeah, bring her on camera. I'm
That's
just
right.
kidding, Jenny.
Yeah.
Just kidding.
Yeah. Hope you're dressed.
So
Prepaying it. What about prepaying it?
Now, prepaying it. Now, we do have some great lender-paid options. Okay, lender-paid mortgage insurance, borrower-paid mortgage insurance, where you can pay one premium.
The ladies are loving your voice.
Gentry. I haven't seen her in a long time, but I do see the posts on there. I see she's doing well. So tell her I said hello.
You're like Barry White, apparently. Like the ladies love your voice.
Well, I did the radio show with Jenny years ago.
You did?
That's where
Yeah, but they said you fell asleep half the time.
Yeah, well, that might have been true. It was early.
It was like 6 a.m.
Yeah, it was on a Saturday. I mean, that was tough.
Yeah, so the beer was out of the question.
Yeah, that was tough.
Gotcha.
But that's when Jenny started with my radio voice, and that was a while ago. So where are we at now?
No, we were talking about prepaying.
Okay, so you got the lender paid, which is great. It builds into the rate, depending on your down payment. If you're at less than 3 to 5% down, a lot of times that lender paid is going to be a better option. Now, 10% down or more, definitely 15%. You want to go monthly mortgage insurance because it's going to fall off. 10% down, I'd even recommend the monthly because maybe you can make a little extra payment every month and get rid of that sooner. Mm-hmm. But the single premiums are attractive. And we just got a call, I think it was this week, that some of those borrower paid premiums up front are going to be reduced.
Yeah. And I had a case yesterday that was talking, Mark Wood, how are you? Had a situation where it really was, the person's credit was so good, because you were talking about risk-based mortgage insurance, that me and the lender were talking. They already had a relationship, by the way. But they were talking, they were thinking, we're going to have to do the lender paid. It was going to be a lower monthly premium, but it was a rare exception where the credit was so good that it was not a better deal. But it was a rare situation because most times you and I have seen where that lender paid is going to be the best option.
Yeah,
but
how much were they putting down?
3 or 5, one of the two.
Okay, so the lender was probably looking at that incorrectly. I'll just be honest with you.
I don't know.
I'm just kidding.
I'm just I don't know. No, but it was a true story. No, but talking about that though, it's very important that we're not rate only. I mean, I can't tell you big enough. Hey, that is not the
look. Anytime you get under less than 20% down payment, even with playing around with the fees and stuff, if you're only going to be in the house 5, 6, 7 years, it might make sense to do things differently. So that interest rate is just the start. I mean, we've got the interest rate, the mortgage insurance, the term of the loan, how long you're going to be in it, the closing cost. We've got so many variables in there that, yes, a lot of people look straight at the interest rate, and it's so funny. I saw a Rocket Mortgage commercial, and they were making fun of a loan officer on the phone talking about origination fees and this and that. And it's like, well, yeah, you make fun of people doing that because y'all don't explain them. Y'all just charge them up and roll with it.
Right.
Wait till they figure it out. Wait till the borrower figures it out.
Well, one thing.
I'm just kidding. That's pretty funny.
Well, one thing that I have taken away already from this is that when folks go, you take somebody like Gentry Williams here, who is just now starting out in real jobs, coming out of college age, right? When they come out of college, the importance of keeping that credit record clean as you can and as high as you can from a very early age. I heard in your comments 3 things that will be affected with bad credit. Your interest rate, your rate of your PMI, which is a totally separate issue, and then your homeowner's insurance. So in other words, bad credit equals you're getting screwed left and right and left and right.
Yeah, and I'll tell you, the mortgage insurance rates are affected a lot more than the interest rate that you're going to get. So yeah, you can get hurt a lot. Your credit score can hurt you a lot.
In other words, my future is affected from very early in this process. My first time home buying, right? The less I'm paying down and less disposable income I have because I'm paying higher premiums.
Yes.
everything.
Absolutely.
Which, I kind of have a problem with the way mortgage-based insurance, because it doesn't mean I'm less of a risk for insurance. I'm not going to necessarily burn my house down any quicker. It's a sloppy way for the insurance industry to raise rates, is what it is, right? I mean, it's not that I'm a bigger risk because I can't.
Because you have what?
Bad credit. Not bad credit, just worse credit.
Well, I think the logic there on the insurance is that maybe you won't.
Sharon said most employers also pull credit, which is true.
Yeah,
and that's again. Now you're not making as much.
Well, let's look at it this way. So if you got really poor credit, okay, you obviously don't pay your bills, so you're not concerned about that. So, this is maybe a stupid example, but you might tend to leave the stove on and not pay attention to that. Your house might burn down that way.
I don't know. What if you're a good cook? I've seen plenty of good cooks that can't count.
I don't know.
I'm just saying.
I don't know. But here, I did want to share this. Okay, so getting back to the cancellation, I've got a graph here that I printed out, so I got to share it, or else I'll just throw it away and not use it. But so 3% down, the average looks like it's about 11 years, or let's say about 10 years before the mortgage insurance falls off. With 5% down, we're looking at about 8 to 9 years. With 10% down, about 6 years. Okay, so that'll give you an idea. From 6 to 10 years, depending on the down payment, 10 to or 3 to 10%. Okay,
right.
6 to 10 years is how long it'll take to automatically fall off.
Well,
and we're still talking about the original value.
Now, what about, I had read too when we were preparing for the fact that if I convert my home to rental use, if I go from owning my house, I sell my house, but instead of selling it, I don't sell my house, I buy another house,
okay,
and I convert it to rental use, that the lender, technically, if I tell them, most people don't tell, but if I did tell you, you could require that mortgage insurance hang on longer.
That if you own it and it's now an investment property.
Yes.
Yeah, that just depends on the time that you have been in the house, but it is still going to be treated as your primary residence. So you still have the benefits of the primary residence financing. Yes.
Yeah, and I know you're going to talk to us about what the CFPB says is the criteria in which they say must be done when that person is going to cancel it.
Right. So the
CFPB is a Consumer Financial Protection Board.
Yes, Bureau.
They're
Consumer
a great
Financial
government
Protection Bureau. We created a whole litany of people.
I hope Trump says not like
to take care of consumer finance, which is managing our business. I mean, there are hundreds of thousands of dollars.
All right. So what must be done?
You must request cancellation in writing. You have to be current on your payments and a good payment history, which that seems to make sense. You definitely have to prove you don't have any other liens on the home. I mean,
you kind of know if you do or you don't.
Yeah.
Some people act like
obviously. They don't. And then you might have to get an appraisal to change the value.
Now, that is a big thing, right?
Because, again, they're looking at original value on this cancellation of mortgage insurance. And another thing, think about this. It is a profit center for the bank.
Which one is the profit center?
The mortgage insurance.
Gotcha. Is there a markup?
No, but it's still income generating revenue for the bank. So they're not gonna just cancel it because you feel like it's over 80%. You're gonna have to put some work into it when you get around to it, unless you get to that automatic cancellation point. So
I tell you, moving on.
All
right. Listener or viewer or whatever you want to call it, question. Hey, good one came in last week. And the question was, insert in a situation where the homeowner is deciding between adding on to their existing home or buying a new one, what things should they consider? When I say a new one, I don't mean a new house. I mean just new to them. It could be a new house, but it could be a used house, if you will.
A used house.
Yeah. So, came up, we found 7 ways to know whether you should remodel and save. Because it's not just clear-cut financial, right? Because what if you love your home, right? You love your area. You love that neighborhood.
Yeah. Or the kids are in a certain school system and you don't want, maybe you got 5 or 6 years left of school. They've already spent, 7, 8 years in the school system. So why would you move them now?
You look at Oak Mountain, right? There's no more land in Oak Mountain to buy.
Right.
You're stuck with an existing inventory that is very limited. So it may not be a good thing if you have to be in that school system. Or you could be also, in an area where, you just love the people you're with.
Yeah.
Your neighbors. That's a reason to stay in it and just remodel. But here's the big one. I mean, I see it all the time with folks asking about it. But can they budget realistically? Right? Oh, I don't think I was watching HGTV, and I don't think it'll be more than $42,000
yeah.
for an 8-story building to go up. Right? Is that realistic? No, it's not realistic. The question is, have they really talked to a real contractor? Like Jay Williams at Build Tech. He's not going to be the cheapest. He's not going to be the most expensive, but he's going to be just right? Because you're going to get it built right, to code, and job well done. But the question is, can he do it for 42? I probably not. Hey, Lindsay.
Yeah. Well, the thing is, you gotta think about what you want in the house and why
Absolutely.
are you moving. Like, is it going to cost you just as much to go buy that house that it would to put it in the house, or do you not have the cash to put it all in the house? Because realistically, if you got a $50,000 pool, let's say, it's going to cost you $50,000 cash out of your account, right, to go put the pool in.
Oh, absolutely.
It's not going to cost $50,000 to go buy the other house because you can get away with 5 or 10% down, right? So in some situations like that, it might be cheaper to go buy the new house. Or I'm sorry, not cheaper, but less cash out of pocket, less cash out of hand,
right,
to go buy that other house rather than taking the money to actually do the changes that you want.
Right.
Does that make sense?
Oh, absolutely. And the next one would be, are you looking for more room, or are you looking for more rooms? Right? In other words, I have a box. My house is a box, if you will. I can create more room possibly with existing space. I just got to knock that wall down, and I can reconfigure. But if I'm looking to create the same amount of box and add bedrooms, I'm probably not going to get it. I'm probably going to have to move out from there, and
you have to make the box bigger.
It's going to be far more expensive.
Yeah.
I may need to just move on and because one thing that has been really interesting, Dan White, how are you? I hope you're doing well out in L.A. I think you're in L.A. now. Anyway, the question is, what's more cost affordable? Because construction costs have not gone back down.
Yeah.
As gas prices rise, think of how much of the construction industry has products like asphalt shingles that are petroleum-based.
Yeah.
And gas prices are going
Yeah,
up.
and speaking of construction prices, I mean, it might be something particular to your house that's kind of weird. Like, you're saying that I may have to move a wall or blow outside of my house to get more rooms, or you may have a small backyard with tough access, right? Mm-hmm. So getting up in there, getting equipment in there.
I didn't think about that. That's true, too.
To put that pool in is going to cost you a lot more. So a lot more than a regular.
Well, and the other thing,
access.
too, is that I've seen so many people not get an architect or a designer because I don't want to spend an extra $75, $100, $200 to see if my plan works, because my best friend, Susie, says it'll work.
Yeah.
Right? It may be worth you $200 before you uproot your whole life.
Yeah.
To have a designer or what are you trying to get some more yacht rock on?
I'm telling you. Look, I know we're winding down. We're coming up on the last little segment here, and I did love the yacht rock.
Yeah, I was sitting there going, "What in the world?" The next part is your home too costly? Right?
Yeah.
Because a lot of folks can have too high of a mortgage payment. Taxes are killing them. My God, the upkeep on some of these older homes.
Yes.
That might be killing me, and I can get into a similarly situated house in another neighborhood that's newer and actually be better than remodeling my current home.
Yeah, and sometimes in these older homes, when you do the remodels and you run into older issues, right? Like you might want to switch out.
She loves Toto.
Oh, there you go.
And their friend is one of the drummers.
So you might. Oh, that's awesome.
Africa. I love Africa. The song.
Yeah. So
I love the country too. I'm not trying to offend anybody.
Right. But I mean, so if you're doing one of these simple remodels in an older house, and once you open up a wall or you get under the kitchen sink and you mean
the floor joist is rotted?
Yeah, all kinds of stuff, right? So those kind of changes to the project could make it more costly than you were planning on and maybe not worth it.
Absolutely. And then the next step would be, you said costly, I said time. Costly, time. No, it can take... You're like, huh?
That's good.
Yeah. Where would you go during these renovations, right?
Yeah.
Are you going to live with your mother-in-law? I don't know.
Just go to the living room.
All right? I don't know. You know, so
get on the couch.
How much is it going to cost to actually the ancillary cost? Sure, you can afford the hard costs, but when they want you out... I mean, have you ever been in a house when they're redoing hardwood floors? One or two things are going to kill you, the dust or the fumes.
Yeah.
So you're out of the house.
That's
true.
So
think about that. And then, what is the ROI? We talked about it 2 shows ago when we talked about renovation costs. What gave you the most bang for your buck?
Yeah.
Is there going to be in that remodel
a
ROI?
Yeah. And part of that's going to be like, how much pleasure do you get out of it? And we mentioned this a couple weeks ago too. Don't do these things right before you move and then you don't get to enjoy them. Do them while you're going to be in the house for 5 or 6 years. Maybe that offsets some of the cost. Well, I'm going to get to enjoy this pool. I'm going to get to enjoy the kitchen, or we're going to spend time in this master bathroom now. So maybe $20,000 on the master bathroom doesn't sound so ridiculous anymore.
And believe me, it's harder. And if you're watching this and you're a first-time home buyer in your 20s, I get it. You don't have a lot of money, right?
Yeah, and you're not worried about upgrading a master bathroom or a kitchen or a pool.
I get it, and don't do it because you're going to overextend yourself.
Yeah.
Right? You got plenty of time.
Yeah, save that money.
And then, the other thing is, would you be over-improving for the particular neighborhood?
Yeah, definitely have to think about that.
I mean...
Because you got to think about resale value. Whenever you... From the time you buy the house till you sell it, obviously you're thinking about resale value. You don't want to buy the most expensive house in there. You don't want to overbuild, like you're saying, and be the most expensive, because when they come to do appraisals and when they come to sell the house, right?
Yep.
You're going to be compared to everything around you, and if there's no other house with with pink flamingos in the front yard and the,
they're phenomenal.
Whatever, then you can't give any value to it.
Well, here's the one thing is about appraisers. They really don't give a rip about. I mean, here's the thing. Everybody wants to go, oh, I'm getting dollar for dollar. And they're following the appraiser around going, look at what I did. Look what I did. Look what I did.
Here's my receipt for this.
Yeah.
Here's my receipt
he
for
doesn't
that.
care.
Yeah, yeah.
He does not care that it's level 8 granite.
Yeah, it's a market
level
value.
8 granite is the same as level 1 granite to an appraiser.
Yeah.
Believe me, we deal with that all the time.
Yeah, and those high dollar fancy maybe bamboo wood floors.
Oh man. Oh yeah. Impact resistant.
Yes.
Actually not bamboo, but you know what I mean? Oh, it's so good, right?
Yeah. I spent $70,000 on those hardwood floors.
Yeah, that's brilliant. You're an idiot. You're an idiot. Now talk to me real quick though about the financing aspects. If somebody's trying to decide between these two things, is it going to be easier to obviously buy a new house and sell the old one financing wise, right?
Yeah, probably.
What's going to have to happen to be able to
thing,
finance that remodel?
The biggest thing is on financing the remodel, you got to look at what are the terms on your first mortgage, because you might be able to take cash out, but the interest rates are going to be a little bit worse. But you could maybe do a cash out refinance to finance some of these things.
And would that finance the whole mortgage?
Yeah, you're redoing the whole mortgage. So let's say your current first mortgage is at 3.75.
Josh Brisman.
Yeah, so if you're at 3.75, and then you're going to have to refinance it 5.25. Then obviously, is that making sense?
No.
Maybe.
Well, yes, but my question though is that if I'm refinancing this whole thing, but what if I'm not refinancing? Is a construction loan ever the way to go?
A construction loan can be,
because what if I don't have enough equity?
Depending on the size of the job, but the construction loan is typically going to take over the first as well. So if
it's the same thing as a refinance.
Yeah, pretty much. Now, you can do equity lines. Those are always an option depending on, and again, it depends on the numbers. If you've got a $400,000 mortgage and you're doing $40,000 worth of work, the math is not going to work, because you're sacrificing the low rate on a big loan versus taking $40,000 out. If you have a $100,000 loan at 3.75, but you need $400,000, then obviously it makes sense to redo the whole thing.
Right.
So, again, a lot of things to think about, a lot of numbers. I would say, for the most part, I think most people would probably look at like an equity line or some type of...
Yeah, I mean, one of my biggest concerns is when people take that whole... They saved up a ton of cash in real cash in the bank and then go plow it into their house. I see the house as an investment, but I also don't think it's your best spot for your money, because if we see housing appreciating at 2%, 3% with inflation, which historically would be good, that's not the best place for your money.
It's not at all financially. You're not going to win that game because your house is going to appreciate. The value is going to go up or down regardless of how much you owe. So you have an investment the day you get the keys, and you're going to make money on it or you're going to lose money on it regardless of the balance of the mortgage, right? So investing this money into your home is going to be really driven by personal enjoyment out of the upgrades that you do.
Right.
In my opinion.
Right. You got a question for you.
Structural loans or equity lines of credit for remodels. No, we do not do the construction loans. We've got a local bank that we work with on that. And the equity lines, obviously we have a local bank we work with.
Oh, you don't do those either?
No, we don't do those either.
Well, yeah, I learn something new every day.
Yeah, we just refinance the first mortgage.
He can definitely get you in touch with somebody good, though.
Yeah, but we refer that out.
Carrie Ballinger.
Like on the construction loans, then we'll come back and do the permanent financing once you.
Oh, is that what happens? Okay, so once you get it, because I knew you loop back somehow, but
yeah, typically the construction loan is going to be a 6 to 9 month deal. It's a short term loan.
Oh, not with Mark Wood. He knows how to do it.
And then so we would do the permanent financing on the back of that.
Carrie, how's the wedding planning? She's getting ready. Her oldest son's getting married.
Well,
planning.
You need to get him onto the Yacht Rock.
Hey, I'm into Yacht Rock, Carrie. Do you know about Yacht Rock? It's incredible.
Man.
I mean, no, listen, this lady's the biggest Poison fan.
Oh, here's Toto right here, Rosanna.
Toto. Who doesn't love Rosanna?
Right?
Oh, yeah. Love it. Hey, Yacht Rock Review down at Avondale, June 3rd. Great band. Yeah. Can't wait to see them.
Let's see. Oh,
what are you doing?
Fleetwood Mac.
Fleetwood Mac. Oh, Michael McDonald. Zach.
Yes.
Red. Michael McDonald. Hey, the man's got a voice, doesn't he?
Man.
Zach, you saw Yacht Rock Review, didn't you, up at a bar in Nashville, I believe? Predators tonight, by the way.
The Preds.
Hey, NHL getting big. Hey, Steely Dan.
You know what's great about some of these old music is the long intros.
Yeah. Oh, yeah.
They don't have those anymore.
Zach Brown might be, or somebody like that, but they're not going to get on the radio.
Yeah. The long intros and the long guitar solos, the drum solos.
Go Preds.
That's awesome.
Zach. Man, I never thought I'd see you as a hockey fan, but the Preds, man, what's up with hockey? Let me say this. Nothing's more exciting than playoff hockey. NBA stinks.
Yeah, I actually went up to Nashville and watched one of the Predators games live, and it was awesome.
Hey, except for the other day, little Lady Antebellum forgot the words to the national anthem, but hey.
That's usually downer. Now, I do enjoy...
Absolutely. The whole Thriller album, wasn't it, Corey?
Now, I am enjoying the NBA playoffs, okay? I'm not going to lie to you.
NBA.
LeBron came in and swept the Raptors.
LeBron who?
Any regular season stuff, but... I mean, it's pretty impressive for the 4 seed come in and sweep the 1.
Zach, one question. He's in Nashville. Did that not tick you off in the Central Time Zone, like 9:30 games? I mean, they were 9:30 at night. I mean, what are you supposed to wait till? You're supposed to stay up all night. Your kids aren't watching. Man, that drove me nuts. You couldn't watch any of it.
They don't care about your sleep.
Well, I don't care about the West Coast.
They're all starting.
Hey, but here's the thing. No, you hit on something. It's like 70% of all viewers.
Kenny Loggins.
Oh, who doesn't love Kenny, right?
Who doesn't?
Pooh Corner or whatever, right? But I saw a stat that like 70% of the viewers are east of the Rockies.
For hockey?
For anything, right, of the viewing public.
Oh, yeah.
East of the Rockies.
Okay.
So why in the heck are we starting a playoff game at 9:30 Central Time? For God's sakes.
Oh, no, you need to call somebody.
I'm not calling ESPN. They are
ESPN's
wackadoodles. They've called Disney.
And they need to work on their
Disney stock.
Their commercial
thanks to ESPN.
break. The commercial breaks on DirecTV now. Oh my God, they are killing me with the. Jay says
Toto's
music.
drummer plays for Steely Dan. Now that is a great fact of the day. That's a great factoid, right? I bet everybody's going to leave here and go get a Yacht Rock playlist.
Oh yeah, the Yacht Rock is the new thing. We started it. Just kidding, but Collier's claiming it.
Zach, that's awful. I mean, how about when people work for a living? I get you on Saturday night fine, have a late game as you want, because Zach Hightower is going to be having a cold beer and watching hockey late into the evening.
Yeah.
But on Tuesday, he's got to go to work.
They don't care. Monday Night Football. I mean, they ruined Tuesday, right?
Yeah, well, there's a lot of things NFL ruined, right? They ruined themselves, but, hey. But the Preds, I mean, I've never seen, this is crazy. He says I need to wear my captain. Hey, yes, in honor of Yacht Rock, I will do that. My captain's hat.
There you go.
Signed by Captain Kate.
Along with the Mortgage Bank shirt. Oh, there's Rachel R. Kelly.
Yeah, Ryan Hartman. What do you think, Zach? Ryan Hartman fan? Well, Carrie Underwood's husband is playing for the Preds. Not playing tonight, apparently. Apparently out for this game.
I don't know.
Yeah, Carrie Underwood. I mean, are you shocked that she got a
no, I think that's
rich
great.
dude?
I learned something new every day. He was a good ad.
Yeah.
Ryan Hartman.
Man, you're talking to two hockey guys, obviously, right?
Yeah.
These guys know what they're talking about.
I mean, if you wanted to talk about LeBron beating the Raptors, I know about that. But
who's having surgery? I guess that would be Carrie Underwood's husband, Mike somebody. Mike Underwood.
Mike Underwood.
Yeah. Mike Underwood. Oh God. Well, man, another great show down.
Listen, you guys tune in to the Yacht Rock and
get you a playlist.
Yeah, check in on us every Thursday.
Mike Fisher. Not Mike Underwood.
Good show, guys. Every Thursday.
See you,
come back
Corey.
and see us.
They all know it. Hey.
Yeah, Rachel's on it too.
Next Thursday, 4 o'clock, we'll be there.
With Kenny Loggins.
See you later. Little Yacht Rock.
That's right.
Oh, yeah. Love it. See ya.